Hello and welcome. We are all anxiously waiting for the upcoming budget on July 23rd. Today, we have with us Dr. V.K. Vijayakumar, Chief Investment Strategist, Geojit Financial Services with us. Hello, Dr. Vijayakumar.
Hello.
Hi. Thank you for being here. My first question, and I think everybody's question is that, what is your overall expectations from the budget?
Well, the overall expectation from the budget is that it will be a growth-oriented budget, a budget which is fiscally prudent, and a budget which can provide some relief to the middle class in the form of income tax reliefs. That broadly, I would summarize this budget that is going to come on 23rd as a growth-oriented and fiscally prudent budget. How do I say that with conviction? Even before the budget is, we need growth to sustain in India. We know that during the last 3 years, India has been the fastest growing large economy in the world. This year also, India will be the fastest growing large economy. And we have a large number of economic challenges facing us. And to address those challenges, we have to sustain growth. And this government also, if you look at the last 10 budgets of NDA government, NDA 1 and NDA 2, their focus was on economic growth. And there is unlikely to be any compromise on growth. That is the first part. Secondly, it has to be fiscally prudent also. Fiscal consolidation is absolutely necessary. And fortunately for the finance minister this year, they are sitting on an unexpected bonanza of more than 1 lakh crores, which they got as the dividend from the RBI. The interim budget had factored in only less than 1 lakh crores. What they actually got was more than 2 lakh crores. Therefore, an additional more than 1 lakh crores have come from the RBI as a special transfer, special dividend. So fiscally speaking, the government is sitting pretty from the financial perspective, and therefore the finance minister is in a position to continue on the fiscal consolidation path. The fiscal deficit for FY25, FY25, as per the interim budget, as per the vote on account, was 5.1%. The finance minister can easily maintain it or at 5.1%. Perhaps she might even reduce it a little bit because there is fiscal room for that. And this is precisely the reason why the government is also in a position to provide some relief to the middle class in the form of income tax relief, because this present new income tax regime, regime without exemption, was introduced in the year 2020. So it's 4 years now. So even if you do the inflation indexation, the exemption limit has to go up, and the government is in a position to do that. So that is the broad expectations from the budget.
Right. You very rightly said that, India has been, the fastest growing economy and probably will be. Now, IMF last week also had raised India's GDP forecast to 7% from 6.8%. And I do have a question on stock market, but before that, I wanted to ask you that what are some of the challenges? Because you said that this budget will be, driven by growth, which is fantastic. 7% growth is very good. What do you think are some of the challenges that Indian economy could face in the coming years?
Yes, we can look at the challenges from two angles. One is the macro challenges. When we talk about growth, it is important that this growth has to be growth with stability, growth with financial stability. So financial stability is important. If you have a high growth, but suddenly the financial stability completely disappears, then you have a large number of problems. That is why the government always focuses on growth with stability. One macro challenge that we have is the high debt to GDP. Our debt to GDP, the center and states put together, is 81%. The developed countries have more than 100%, but they have AAA credit ratings and can afford to have 100, 120, even 200% debt to GDP ratio, like in Japan. But developing countries, emerging economies like India, cannot afford to have a high debt to GDP. So that is why we have to reduce our debt, not in absolute terms. The GDP increases, the debt to GDP ratio will come down. So that is the macro challenge which we are addressing. It is not an insurmountable challenge, but that is a challenge. Then
Right.
going to the medium to long term, we have challenges on the employment front. We have the challenges on poverty reduction. But then these are problems which cannot be solved overnight. You need sustained growth for that. If the Indian economy achieves 7% plus sustained GDP growth over the next several years, then the government can implement large number of redistributive programs. The government can continue the free food grain distribution to 80 crore people so that the hunger is no longer a problem. Poverty will continue to be a problem because it will decline only slowly, but we can address the problems of hunger. We can focus more on the Pradhan Mantri Awas Yojana, which is a top priority of the government. At this stage of India's economic growth and development, it is very important that all people should have a roof over their head, and therefore such programs should have a top priority. And that's why growth with stability is important, and only growth can give the government adequate resources, and only with the resources the government can address these challenges.
Right, very rightly said. Now you spoke about Japan's economy. I just want to understand, what your thoughts are about, say, inflation, because more or less, probably inflation is still controlled in India compared to if you want to talk about the US or Europe, that they are on the verge of cutting rates, but US just Fed just can't. Uh, what is your expectations? When will the RBI move towards a rate cut, or do you see persistently higher inflation due to monsoon?
Well, our food inflation is a concern, and food inflation is something which can't be brought down through monetary policy. If the RBI or the Monetary Policy Committee raises the repo rate, food inflation will not come down. Food prices will depend more on the monsoons. The El Nino phenomenon, which we had last year, impacted agricultural production. Therefore, even now I say, even though our latest CPI inflation print is at 5.08%, it is above RBI's target of 4%, but it still is within the tolerance band of 6%.
Yeah.
Yes, the RBI will not be unduly alarmed by that. And this year, we are already having very good monsoons, and therefore the food protection will be good. So we can expect a decline in vegetable prices and food prices also in the next couple of months. The RBI's projection for RBI projection for CPI inflation is 4.5% for financial year 25. That is achievable. But then it is important to understand that the budget can't do anything about inflation, because inflation control is in the realm of the central bank, one, and secondly, it is in the realm of the GST Council. The GST Council can take a call on cutting the tax rates on certain consumptions of products of mass consumption. The finance minister at the center or the finance minister at the state level, finance ministers at the state level, can't do anything about that. Therefore, the budget is not the instrument to address inflation.
Right. Very nicely said. Now, the most important, probably aspect of this show is where is the financial market headed? What will be the reaction during the budget or post budget? What's your view on that?
Well, it would be difficult to predict that. That will depend on what the budget proposals are. It depends
Right.
on budget proposals.
Yeah.
As I said at the beginning, this budget is likely to be very positive. It is unlikely to have any negative impact on the stock market. But if there are some budget proposals, for instance, if the finance minister tweaks the long-term capital gains tax, well, it can have an impact on the market, but that it be all the impact of the budget proposals on the market will be short-lived. But then to the answer to your specific question on what will be the impact on the market, it depends on the budget proposals themselves, particularly budget proposals regarding long-term capital gains tax. We don't know what the finance minister is going to do.
Of course, of course. So, Dr. Vijayakumar, one last quick question. Do you think, I think you do, but I still want to ask you, do you think that this budget is going to be a populist budget?
It is unlikely to be populist because populism is negative. It can be popular without being populist, right?
Right.
The finance minister should try to bring about a budget which is popular but not populist, because populism means bad economics, and we know bad economics can be good politics, but good politics can be populist programs, can be very bad economics, and that can impact economic growth, that can impact the economy, that can impact the ruling party, everyone in the long run. Therefore, the finance minister is unlikely to do that. Particularly, there was an option to bring about a populist budget with a lot of giveaways in the interim budget presented by the finance minister. But they did not do that. That was before the elections.
Right.
You should be populist before the elections. Now, of course, we have elections coming up in some key states like Maharashtra. Therefore, there can be some attempts at placating the masses. But then a populist budget is not the right kind of budget that we expect right now. And also particularly from the market perspective, all that the market participants, particularly investors, are asking for now is, please don't tweak the long-term capital gains tax. Right? Because there are rumors that the finance minister may raise the long-term capital gains tax from the present 10% to 20%, or she might make some changes in the tenure of the long-term capital gains tax. Right now, it is 1 year, and beyond 1 year is long-term capital gains tax of 10%, and up to 1 lakh, it is completely exempted. If there is some very serious tweaking on that, either by raising the long-term capital gains tax by 20%, that is the most important concern, then that will be impacting the market. That is the only concern which investors have. Investors are not asking for anything now, because we can logically, investors can say that when the long-term capital gains tax was abolished in 2004, the finance minister said, we have introduced the securities transaction tax, STT, and STT is in the place of long-term capital gains tax. Right. So when the long-term capital gains tax was reintroduced, the STT should have been abolished, but that was not done. Therefore, it is legitimate to ask for abolition of securities transaction tax. But the investors are not asking for that, because investors are happy because the market is very bullish. And therefore, our hope is that the government, the finance minister, will not be tweaking the long-term capital gains tax, thereby impacting the market. Otherwise, we expect this budget to be very positive, because there is fiscal room for a popular budget and not a populist budget.
Right, right. Very, very, very informative, Dr. Vijayakumar. I want to personally thank you for joining the show.
Thank you.
That was Dr. K Vijayakumar, Chief Investment Strategist, Geojit Financial. Keep watching Oneindia. Thank you.
Don't miss out. Follow Oneindia for real-time updates.